AMMB Holdings says its 51% owned AmGeneral Holdings will be disposing of its entire 100% stake in AmGeneral Insurance to Liberty Insurance for 2.29 billion ringgit. The deal will be satisfied via cash and a 30% stake in Liberty Insurance. The price tag of 2.29 billion ringgit is subject to adjustments. In a Bursa filing, the group said AMMB's share of proceeds from the proposed disposal will be satisfied via a combination of cash and shares, which will result in AMMB holding a 30% interest in Liberty Insurance and AmGeneral's businesses. Upon completion of the proposed exercise, AMMB and Liberty Insurance's parent company, Liberty Mutual Insurance Company, will hold a 30% and 70% stake respectively in Liberty Insurance and AmGeneral. AMMB will be accounting for the proposed exercise as disposal of a subsidiary and subsequently will account for the 30% retained interest in Liberty Insurance and AmGeneral as an associate undertaking. Under the deal, Liberty Insurance will also acquire the remaining 49% in AmGeneral from Insurance Australia Group. Liberty Insurance and AmGeneral's operations will then be formally merged. As part of the transaction, the prospective merged entity will enter into an exclusive 20-year new bancassurance partnership to distribute general insurance products. Shares of AMMB closed 1.39% higher at RM2.92 today, valuing the group at 9.68 billion ringgit. CTOS Digital debuted on the main market of Bursa, Malaysia this morning, surging to a high of RM1.76, a 60% premium over its initial public offering price of RM1.10. The stock opened at RM1.50 or 40 cents above its IPO price. At the close, it stood at RM1.62, up 47% over its issue price, with a trading volume of 366.36 million, making it the most active stock traded on Bursa. The share price exceeded Kanger Research's target price of RM1.40, which is pegged at 45 times earnings for FY22, and UOB Kay Hian Research's target price of RM1.32 based on 40 times FY22 price to earnings ratio. The CTOS Digital Group provides digital solutions across three core customer segments: the key account segment, which includes leading financial institutions and corporates, the commercial segment, small and medium businesses, as well as over 1.3 million individual customers. Its listing is the largest on Bursa thus far this year. The exercise raised 1.2 billion ringgit, of which 220 million ringgit was by issue of new shares at RM1.10 per share. Shares offered to the public under its IPO were oversubscribed by 27.57 times at 1.38 billion ringgit, the largest retail demand for an IPO since 2013. It has also garnered a record 23 cornerstone investors in its book-building exercise, with notable names including the EPF, PNB, Aberdeen Standard Investments, AIA, East Spring Investments, and JP Morgan Asset Management. Electronics company Vitrox Corporation saw its share price surge to a 5-month high of RM16.88 this morning. It was the top gainer on Bursa Malaysia today, pairing gains to close still 4.5% higher at RM16.68 for a market value of RM7.9 billion. In an exclusive interview with The Edge last week, Vitrox's co-founder, CEO and president Chu Chen-Wang revealed that the group has ventured into precision smart farming. Chu told The Weekly that the company aims to revolutionize the regional agriculture industry by designing, creating and promoting innovative high-tech smart agriculture solutions. He said this will be a very exciting area for the company in the next 5 years, as it is well aligned with its core values, and that Vitrox wants to use machine vision, AI and robotics to help farmers grow their crops in a more sustainable and cost-effective manner. He also shared with The Edge that Vitrox plans to build an industry-centric university, as the group hopes to produce a sustainable pool of skilled workers for the next decade and beyond. ACE market-listed Kanger International says its unit has inked a deal for the purchase of 5 million doses of Sinopharm Covid-19 vaccines for distribution in Malaysia. According to Kanger's filing with Bursa Malaysia today, the heads of agreement was entered between Kanger Medical International and Sparmark Medical Equipment Trading, an authorised partner of Abu Dhabi's G42 Medications Trading. The vaccines are produced in the United Arab Emirates by a JV between Sinopharm and G42 under the HayatVax brand. Deliveries are expected to start as early as this month. The agreement provides Kanger an option to subsequently purchase an additional 5 million vaccine doses. Kanger has also been authorised to be the product registration holder and distributor of the HayatVax vaccine in Malaysia. According to Kanger's Executive Director Stephen Kwah Chun Ching, this deal represents the beginning of a long-term strategic venture to commence the distribution of these vaccines in Malaysia. He said the group is confident that the vaccine will be well received and accepted by the Malaysian people. The private COVID-19 vaccine market is expected to commence next month, which would allow industry players to purchase their own vaccine supplies. Kwah said this would bode well for the group's plans in expanding into the healthcare segment. Kanger ended trading today 7% higher at 7.5 sen for a market capitalisation of 209.7 million ringgit. CGS CIMB Research is maintaining its overweight call on the banking sector even after factoring in the impact of the automatic loan moratorium under the Pemulih Aid Package. The research house said in a note that it still projects net profit growth of 2.9% for this calendar year. Based on its knowledge, CGS CIMB Research said none of the banks have provided any guidance on the exact quantum of modification loss due to the moratorium, though some have said it will be smaller than that booked in the second quarter of last year. It said it is taking the 1.58 billion ringgit total net modification loss recorded in the second quarter of 2020 as the worst case scenario for this year, noting that the largest was 498.4 million ringgit for Public Bank, while there was a small write-back for Alliance Bank due to its limited exposure to auto loans. Based on this, CGS CIMB Research said the modification loss shaves 6% of its projected calendar year 21 net profit for banks under its coverage in the worst case scenario. It noted that the figure is reported net profit, which excludes the one-off provision of 2.83 billion ringgit for 1MDB settlement, impairment of 1.79 billion ringgit for goodwill, and 147.8 million ringgit for impairment of investment in associates incurred by AMMB in the first quarter of this year. According to its estimates, the impact will be the largest for RHB Bank's calendar year 21 net profit at 15.2%, mainly coming from personal financing and auto loans, while Alliance Bank will not be affected given its small exposure to auto loans. CGS CIMB Research's top sector pick is Public Bank. It has an ad call and target price of 5 ringgit 30 on the counter, which closed today at 4 ringgit 4 sen.